Welcome to The Way, the podcast where we dive deep into the world of legal business and marketing. Each week, we'll be discussing the latest trends, strategies, and insights that are shaping the legal industry. So whether you're a lawyer, marketer, or business owner in the legal industry, this podcast is for you.
Hi, I'm Ryan McKean, and welcome to this very special episode of the Way podcast with Darren Wurz. Hey, Darren.
Hey, Ryan.
Darren, now this is like tables turned, right? Like I have been on your podcast, and now you're on our podcast. So can you tell our audience a little bit about yourself?
Absolutely. Yeah. Where do I begin? I am a financial planner by trade. I spent many years as a very community-based financial planner, and then slowly started to focus more and niche down more to lawyers and law firm owners. We noticed that lawyers and law firm owners have some unique challenges as business owners. They're dealing with taxes, they're dealing with their business, they're trying to figure out how it all fits together. And, every personal decision is also part business. There's a business component to everything you're thinking about. We built our practice very specifically around serving law firm owners and brought together tax planning and tax filing with wealth management and a little bit of business consulting as well to try to create a more holistic form of financial planning for law firm owners.
So Darren, I've worked with a bunch of lawyers. I am a lawyer. I think most people get into the law because they want to help people or they want to be a lawyer, right? And I think most of them are not inherently money driven, which may sound bizarre. There are some folks out there in the legal profession who are very, very money driven, but I think those folks are the exception. And what do you think for most lawyers out there, not the exceptional ones, not the Marco Browns of the world who are very into money, we'll say, but what are the biggest mistakes that you see lawyers and law firm owners making with their money?
I think you said it. And it is maybe being too sacrificial. I talked with the law firm owner recently who has a 7-figure criminal defense practice. Great accomplishment. I mean, tremendous accomplishment, right? And is paying himself less than any of his associates and barely squeaking by. And I thought, I think that's it. I think not focusing on the money enough is the biggest thing. And I see this all the time. I see law firm owners who are really working hard, building great practices, but not rewarding themselves enough as they should to take care of their families. And I think maybe there's too much altruism, right? Maybe there's a fear around taking profit and running a profitable business and being in it to make money. But I think we need to dispel that because you deserve to get paid and to build a legacy for yourself and your family. And so I think that would be, probably the biggest thing. One of my first clients came to me. He was midlife, like late 40s, had a very, very large, thriving practice, 10 attorneys working for him, doing tremendously well, but not really paying himself what he needed to pay himself, and a lot of cash flow chaos between his personal, finances and the business, and, freshly out of a divorce. And despite having a multiple 7-figure income in his business, had not accumulated any significant wealth outside the business. And all of a sudden you're 49 years old, you're thinking, I'm going to probably want to retire in 20 years at least. I've got some work to do. So that's what I see a lot of.
What are some of the things, like, one of the things that we teach as consultants is really, building a better law firm is like winning a football game where it's a lot of, if you can block and tackle well, you're going to win a lot of football games. And I think with law firm businesses, people get all into, KPI and AI and SEO and all these sorts of things that can be important and useful. And believe me, I live in those worlds. But
Yeah.
what are some of the blocking and tackling things for somebody out there,
Mhm.
whether they're running a firm or they're thinking about starting a firm, that are really core sort of foundational financial things that they should be doing?
Oh my God. Yes. So I love that analogy because it is true. If you can simply avoid the big mistakes, you'll be tremendously successful. Okay. And so as far as blocking and tackling, I think the first thing, number one, before you do anything, you need a clear line of separation between your personal life and your business. That right there will solve so many problems and help you become so much more financially successful, both in your business and in your personal life. If you create a solid, in, impenetrable wall between the personal side and the business side, you will change your life. And I can say that because I have literally seen it happen. This was with one of my first clients. This is the first thing we did, and it's not rocket science, right? You're paying me to help you do this, but sometimes it's hard for people to do that on their own without a little bit of a push. But let me tell you something. When those two worlds are separate, you're going to create so much more stability for yourself and for your business. And you cannot start to really save and build wealth until you have that stability. Because what I see a lot of is owners are taking a draw from the business at random when they need money. The roof needs to be fixed. I'll just take a draw from the business, or whatever it is. Or when they are able to pay themselves, they're just sending money to their personal accounts when they're able to, or they're sending money back to the business. The business accounts are running low. I'm going to send some money back. And it's just this crisscross of money moving back and forth. So one of the first things to do is separate your personal accounts and your business accounts. No more expenses on the business cards. I'm sorry. I know you love the points, but you've got to separate those out and start paying yourself a regular fixed amount. And I get a lot of pushback on this. I get law firm owners who say, "I'm not an employee, I'm the owner." Well, you are. You're the most important employee. Okay? And we've got to pay you. Now, some people will say, "Well, I'm on draw. I don't take a salary. I just take a draw." Well, then we can make your draw a regular fixed amount every single month. And when you do that, when you in your personal bank account know, I'm going to receive X amount of dollars each month from my business, now we can make sure all the things are paid for. Now we can set aside money for the kids' college fund. Now we can invest in our IRA and Roth IRA, et cetera, et cetera.
Yeah, that is such a thing. And we work with a lot of law firms, and yeah, they what do you mean I should pay myself a salary? I'm like, would you go to work for somebody else and not get a salary? I'm like, what are you, what universe? Like, I know you're the owner, and the owner entitles you to a profit. And Allison's on this call as well. One of the things that changed our lives was really adopting profit first.
Funny you mentioned that because yes, I love Profit First. I use Profit First both in my business and in my personal life, which is really cool. And in fact, this year in our community, our whole theme is profit on purpose. And we started out this year by reading the book Profit First, and we've been talking about it. I think it really is powerful. And if those of you who are not familiar, Profit First is essentially taking all the income that comes into your business and subdividing it by percentage into different buckets. One of those buckets is owner's comp. All right. And one of those is profit. So you're proactively setting aside profit ahead of time. Now, I will say this. There's a danger to profit first, because you can use profit first and still be unprofitable. And what a lot of people do is they'll implement profit first, but they won't take the next step. And the next step is an expense audit, and actually looking through all of your expenses and determining, okay, where are we being inefficient and where can we be more efficient? And oh, we don't need to be spending $50,000 a month on Google ads, right? And just trying to fix the efficiencies of the business. Because if you don't do that and you just maintain at the status quo, and profit first for you is just moving money around in different accounts, well, you're not going to actually be profitable. Your profit in your profit account is going to be fake if then you're accumulating credit card debt on the other hand, right? So that's what a lot of times happens is people will implement profit first, but then they're covering the gap with credit cards and lines of credit, and you're kind of defeating the purpose, because the purpose is to create a profitable business and grow profitability.
Right, right. And that's very true. And I mean, what you're talking about in both our past two questions is really discipline. And one of the things that we would do when we implemented Profit First was it was sort of like a canary in a coal mine when we're having to come out of profit to take payroll, to pay payroll, or our payroll accounts are too low or too high. Even if they were too high, we're like, we probably need to be hiring somebody, or maybe we need to be hiring somebody, right? Because we are, and I'm curious on your thoughts about this. We were big believers in ratios for firms.
Mm-hmm.
Spend 10% on marketing, put 25% to profit, put, X
Yeah.
amount to operations and X amount to salary. Do you subscribe to such a mindset? If so, like, what are some general numbers or percentages that people should be thinking in?
Yeah, absolutely. So numbers are great as standards, right? To give yourself like benchmarks. Because sometimes you're like out there wandering around, like, what do I do? How much should I be actually spending on staff? You know,
Yep.
uh, the next book we're going to read is kind of all about that. Is Simple Numbers. I'm sure you've read it by
Yes.
Crabtree.
Yes.
And just thinking through, okay, how much should I have in my emergency fund? By the way, you need two emergency funds. You need a personal emergency fund, and you need a business emergency fund. So making sure you have at least 2 months of operating expenses in that business emergency fund. Yeah, I think there are some really key ratios that can be very, very helpful to sort of give you some guidelines and some metrics. My favorite is though profit. What is the actual profit, right? Let's measure it. Let's look at it. Let's forecast it out. Let's not wonder, right? Let's actually forecast how we think we're going to end the quarter ahead of time. Let's not get to the end of the quarter and then be like, but did we make money? We can do that. Just being very, very mindful about tracking that carefully on a regular basis.
So what do you think is a good profit margin for a law firm?
Probably 30 to 40%, I think would be a good profit margin. As the owner, you should be taking home a third. I mean, you should be taking home 25 to 35% of the revenue. Now, I want to address maybe a concern people have, like, should I really be paid that much? Should I really be making that much money? That's a legitimate question. It seems unfair, right? I would argue it is your ethical and professional responsibility to be that profitable. And the reason I would argue that is you have to be able to weather the storms. You have employees whose livelihoods depend on you, and it's your job to take care of them. It's your fiduciary duty to take care of them. You have clients who depend on you, and you can't do a good job advocating for your clients if you're in cash flow chaos. So I think I say 30 to 40% for profit margin, right? And I think that's good. I think that's necessary.
Okay, and when you mean, just for folks out there, like profit margin is in addition to their salary as an owner.
Mm-hmm. Now it can vary, right? I'm sure you know, the larger your business gets, the smaller your owner's comp as a percentage will get, and the larger
Sure,
the
but the bigger the pie, correct. And when I talked to very solos and maybe people with one or two people, I'm like, it's really hard to accurately gauge any of that because but yes, when we were close to 40 people, we were running about a 25% margin, but on a much bigger number, a much
yeah.
bigger gross number, and it was fine. But like, yes, the bigger you get, the margins will come down. And sometimes I hear, solos or somebody who's small, like I have an 80% margin. I'm like, no, like that's
Enjoy it.
uh, well, but they're not factoring in necessarily their salary.
Oh, sure.
Um,
Yeah.
And so when you say what I'm saying is when you say a 30% margin, you're talking, say somebody pays themselves the Social Security or the FICA minimum or maximum or whatever that is, 159 or something like that. I don't know. But you're talking about numbers over that, like their salary doesn't count towards their profit, or does it in your world?
It could. Yeah, I think if you're as the owner between profit and salary taking home 35%, you're doing really
Okay.
well. Yeah.
Good. And one of the, I mean, I'm curious on this one because one of the, this is something I push back on. And I'm just really interested in your take on it, which is, you often hear sometimes in business, and I forget what McAllowitz says in Simple Numbers, but people say like, I shouldn't allocate more than a third to payroll.
Hmm.
And I think that is probably true if you're like a Target or a Walmart or something like that, where you
Yeah.
have high operational costs, real estate costs, leasing costs, electricity, all of these things, right?
Yeah.
In law, you're in a service business,
Mhm.
and essentially, you're also dealing with a very limited talent pool. You can't just hire somebody off the street and give them a smock and say, "Hey, go stock shelves," right? Um, and I think that the payroll percentage in law firms, the percentage of gross income, is higher than a third. But I'm curious to what you think on like a sort of how much of gross revenue should go to payroll in a law firm.
Yeah, I would say it's definitely higher. It's probably in the neighborhood of 40 to 50%.
That's what
It's
that's
Yeah. If you're in
we
a people,
say we say 40 to 50%, and if you start going above 50%, you have problems. We tried to target about 45% in our firm, and we're comfortably profitable at that.
Mm.
But it's, if you're out there and you're listening to this podcast and you got nothing else, like don't sit there and just think like, oh, I read that it should be only a third of money to payroll. Um, what are some common misconceptions for lawyers about taxes? I actually think that lawyers, and I had to actually learn this the hard way, sort of even what is the difference between a bookkeeper, an accountant, a tax strategist, and a financial planner? What different skill sets do they bring? What does that team look like? And I would like you to at least start approaching my question from sort of a team building perspective as to who should be on your financial team.
Yeah. So that's one of the cool things about what we've built is we've created that team. So in our business, we give you the whole team, all the members. We have CPAs, CFPs on the team, so you get all the players in one stop, which is really nice. I think you need a really good CPA who's going to be proactive, and not simply filing your taxes. You need a really good bookkeeper who understands IOLTA and who understands the nuances of a law firm and can provide you with financial statements. I think that's really important. Um, profit first is great, but it's no replacement for actually having a P&L and looking at the P&L. You need a financial planner or an investment advisor on that team as well. You may need an attorney, an estate planning attorney. And I think that kind of forms kind of the bulk of the team there. You need business advisors around you as well, probably too, to help you think about all of these things. Misconceptions with tax. I think you asked about that as well, right? So let's talk about that. I love the tax question. And I think it's really powerful to have all of these members at a minimum speaking to each other. Like the tax, it's great if they're all on one team, and the power there is that the power for us is I can get together with my team members and we can have a meeting about a client and the client situation, and the client doesn't need to be there, and we can communicate. What we see happen a lot is that there's a breakdown of communication amongst the different advisors. The retirement plan is handled by one person, the investments are handled by another person, the taxes are handled by somebody else, and then there's a bookkeeper somewhere else, And so having everybody in the room at the same time reduces the possibility of mistakes. And believe me when I tell you, we review tax returns for clients and we find mistakes all the time. And we're talking 6-figure mistakes. So it's really important to have everybody communicating. And when you're small, you're only making $100,000 a year, a small mistake, a 10% mistake is a small mistake. When you're making $1 million a year, a 10% mistake is a big mistake. So it's also about checks and balances. And you need multiple advisors. And some people will tell me, well, I already have somebody doing my taxes. I don't need a tax strategist. Well, I would argue you do, and you want somebody else because you want multiple people checking the things. You want lots of people making sure everything's happening correctly and that there are no mistakes happening. I think that's really, really important. The more you grow in revenue, to have those checks and balances in place. On the taxes, let's talk about that. I think the biggest misconception is that it's all about deductions. And in fact, it's all about timing. So let me explain. And I think taxes is a really, really, really important thing right now, because I'm seeing a lot of fraudulent tax schemes going on and abusive tax schemes happening. There are a lot of tax strategists out there on social media and everything, talking about, we help business owners get their taxes down to zero. And, they have all these crazy ideas like micro captive insurance and, buying a solar farm in Argentina and, all of this stuff. And these things are a very high focus for the IRS right now, because a lot of these things are what we call fraudulent tax schemes. And the way and they'll say, oh, all you got to do is, watch a PowerPoint once a month and, you qualify for your active participation. It's like, okay, the IRS is going to see right through this. If something exists purely for the tax benefit and not for a legitimate business purpose, then it is a fraudulent tax scheme. And I think law firm owners need to guard themselves, because you guys are targets of people promoting these fraudulent and abusive tax schemes, because you have great revenue, you have a business, you probably are in a high tax bracket, and tax planning is a big concern for you. You're going to be targeted by these people if you're not already. Now, the most important aspect of tax planning is timing. Okay. From our perspective as financial planners, your income is going to fluctuate throughout your life. There are time periods where you're going to be a much lower income. You're going to be in a lower tax bracket. There are times you're going to be in a much higher tax bracket, making a higher income. Especially as a business owner, your income may fluctuate. You may have a bad year. You may have a great year. Bad years are blessings in disguise. Because what we want to do is we want to pay the tax when it makes the most sense to pay the tax. And the way we do that is by harnessing the power of our retirement accounts, our IRAs and our Roth IRAs, or 401ks and Roth 401ks, and using a very powerful tool called the Roth conversion. And so all the money you have in your IRAs and 401ks is pre-tax money. It's money you have not paid taxes on yet, and it will be taxable whenever you take it out in the future. When you get to 73, 74, you're going to have to start taking that money out because the government's going to force you to do that, and your tax rate's going to go up. So what you want to do is look for those down years. Maybe it's early in your career, or it's some time during the middle of your career and you had a low point in the business, or it's late in your career after you've retired and your income has gone down. Those are prime moments to do Roth conversions. And what you do in a Roth conversion is you're going to take whatever amount of money you want from your IRA or 401k, pay the tax on it in that present year, move it over to the Roth IRA where it will be forever tax free. So the biggest thing with tax planning is timing, and it's looking at your lifetime and thinking about how do we minimize your effective tax rate over your entire lifetime.
Yeah, no, I mean, really, I think what I'm getting from this, Darren, is, holistic planning is very important.
Yeah.
Holistic planning. This comes up, I think increasingly, in some of the, especially the personal injury circles I travel in, people setting up shop in Puerto Rico for tax reasons.
Oh, okay. Yeah.
So, I mean, any thoughts on that? Should people do that, not do it, consider it, what to consider?
Yeah, I'm not like super familiar on that. However, I do know that I think it was during the pandemic or shortly after the pandemic, there were some massive tax incentives to move to Puerto Rico. And that's totally legitimate to take advantage of if you're taking advantage of it properly. In fact, there was so many people who moved to Puerto Rico that it created a real estate bubble in Puerto Rico. There are so many different things that you can do. The question is always, the question I want to ask, is it going to be worth your time and money ultimately? There are a lot of tax strategies that you could engage in, but thinking about your effective hourly rate and what kind of time it's going to take you to invest in this thing, whatever this thing is, how much money it's going to take you to set it up. We want to look at it from a total ROI perspective, and is that really going to generate the ROI that you need?
So, okay, so that's a great perspective because you don't want to spend $12 to save 10 by moving to Puerto Rico. That doesn't make sense. You're better off paying the tax. Now, okay, so one of the things I think befuddles lawyers a ton, like we very much have just one title, which is lawyer, and maybe in an antiquated way, you sometimes see ESQ after people's names. When I go on LinkedIn, financial people, the letters beyond their names and all of that, it means nothing to me. You might as well have just smashed the keyboard. I get CFP and CPA, like that makes sense. But when we start going down that list, I'm like, what is this, right? So can you help somebody out there if they're thinking about engaging somebody? What kind of certifications tell you that somebody's legitimate versus somebody who's not? Because I think to non-financial people on LinkedIn and things, like it just all looks like a mismatch of letters.
Sure. Yes. It's such a great question. I love it. The gold standard is the CFP. Now there are a ton of designations, they call them, that you can get. Ton. An ever-evolving number, the alphabet soup, right? Many of them are simple, like all you needed to do was take a course, a week-long course, and take a test, and then you got your letters, right? And that's not helpful. The CFP is the gold standard because it's much like the CPA. It's a very, very rigorous program. It's a very rigorous exam. So if I was going to look for anything, that is probably the one I would look for. Now you could research them and you could look them up and you could see what all the different letters mean. And some of them are more useful than others, but the CFP is going to be the number one. In fact, it's very recognized by government authorities, by regulators. You don't need to pass certain regulatory exams in the financial world if you have the CFP designation. So among them, that would be definitely my go-to. A bigger question I would ask, and the most important, I think, beyond letters, the most important question I think to ask is, how is the advisor paid? I think that tells you what kind of an advisor they are, because unfortunately there are no real regulations for who can call themselves a financial advisor or a financial planner. Actually, financial planner is supposed to be a bit more regulated. Technically you need to be a registered investment advisor or have a CFP in order to call yourself a financial planner. But there are lots of people who call themselves financial planners who are not. So the key hint, the key clue is going to be, how does the advisor get paid? If the advisor is registered with the SEC and is paid solely by you to manage investments, they are what's called a fiduciary. Now, so there's a few, let's just back up. There are a few ways that advisors get paid. One is commissions, which means that they are paid based on the products that they sell you. So they sell you an insurance policy, they get paid a bonus from the insurance company. They sell you a mutual fund, they get paid a commission from the mutual fund. Those people might be great people. They're not people that you want to rely on for advice. You can go to them to get products, but they're not people that you want to rely on for advice necessarily, because there's an inherent conflict of interest. If you're looking for holistic advice, like a financial advisor, you want somebody who is either paid just by you as a percentage of assets or a flat fee. And that means that they are going to be obligated to act in your best interests as a fiduciary. So percentage of assets is very well known. They are paid 1% or whatever of your portfolio. We actually operate on a flat fee basis. I never really liked the percentage model. It didn't really make a ton of sense for me. Why should someone with a $2 million portfolio pay twice as much as somebody with a $1 million portfolio when they're getting the same things? So we use a flat fee model. We find that it's very, very popular with law firm owners who tend to be a bit more skeptical of investment advisors. Why would I give my portfolio to an advisor just to have them take a percentage? Totally makes sense. Totally get it. Especially when the best thing you can do with your money probably is just put it in the S&P 500. The value that we provide is optimizing the investment portfolio, but it's more around the holistic planning, coordination, and execution of the financial plan.
Yes. No, that makes, it makes sense to me, Darren. And it's about your personal finances, your goals, your businesses, your insurance, your ability to put into retirement funds, defer, like all of it is, holistic advice. And, to anybody out there, the sooner you start treating this stuff as a job and a function of your job, look, we live in America in 2026. Money doesn't solve all problems, but it solves many problems, right? So if you're out there and you're like if I just asked you, how many problems do you have that could be solved if you had more money? People would generally raise their hands for almost everything but health-related issues, correct? And so if you're out there really, I think, look, I am one of these people who went to law school because I wanted to help people. I gloss over. You can ask Allison when I meet with an accountant or our tax strategist or our financial person or our estate planning. I just I mean, like, sign. Where do I sign? Like that is where my mind goes. But really and truly, like that's all the more reason to find somebody out there who knows what they're doing, who can look at your books, who can give you holistic, honest advice, who's seen it. Because yeah, I think on one level, like Biggie Smalls is right, like more money, more problems, but to a point. More
Yeah, yeah,
money, less problems is often the case for most lawyers. And honestly, like you look ethically, most of their problems that come in from law firms are money problems. They borrow from IOLTA because they can't make payroll, or they have to make a mortgage payment, or their child's tuition is due, or whatever. And it's just no way to compromise anything that you have worked for, especially when, the greatest thing to me about financial people in my life is like they make me money without me having to work. And I like that. And as much as I love this country too, I like paying it as little as possible because it's always when you're a wage earner fundamentally in this country, you pay very high amounts of tax. Whether you're me or any other lawyer or Taylor Swift, you get taxed on that stuff, and you really can do things to, I think, legally reduce your tax burden, and
yeah.
also, you
And
know, I would say at a very base level, what I see with law firms is you can reduce your tax burden simply by having accurate books.
oh yeah,
and and actually knowing what your income and expenses are, which sounds really basic, but if your income is off, you're paying too much, your expenses, like,
yep.
so it starts with sort of a good foundation. Darren, if somebody wants to reach you, what's the best way to find you? I know you've got a podcast, you're active on LinkedIn. Where would they find you?
Yeah, we're on LinkedIn, so you can find me there. The podcast is the Lawyer Millionaire podcast. So check it out. We're talking about profitability all year long. So we're digging in deep. But the easiest way to find me is just go to lawyermillionaire.com. You'll see everything there, the book, the podcast, all of our resources. You can schedule time with me there if you want as well. Or just hit Google and Google me, you'll find me.
There you
I'm
go, right?
posting on-
Or chat GPT you, right? Like, I mean,
yes.
in 2026, right? Like,
Or Claude me.
so
People say that?
Claude you, yeah, Claude you, maybe we're putting words into the lexicon. Maybe we should trademark this, Darren,
Right,
on,
right.
Claude me. But no, so if you're out there, reach out to Darren. If he can't help you, reach out to somebody else, but definitely engage in exactly the things that we're talking about. Get your books in order, get your taxes in order, make your investments in order, get your life insurance in order, get your estate plan in order. All of these things do work together, and there's hardly any lawyer I know that wouldn't benefit from really good professional advice regarding finances.
I couldn't agree more. Thanks, Ryan.
Thank you, Darren.
Thanks for joining us on this episode of The Way with Best Era. Be sure to visit our website, bestera.io. From there, get more resources, insights, and to connect with us directly. Don't forget to subscribe to our podcast on your favorite platform. That way you never miss an episode. Until next time, keep striving for your version of success.